four principal changes. The first change in respect of first-time buyers and the percentage that they can borrow of a property's value. Up to the new restrictions coming in a week ago, they could borrow up to 92% of the purchase price. Today, up to €220,000, they can borrow 90% of that price. If they want to buy a property in excess of $220,000, they get 90% up to the first 220 and 80% over that. For non-first time buyers, the maximum they can now borrow is 80%, and for investors, the maximum they can borrow is actually 70%. There's also a new lending restriction, which is based on a multiple of salary, whereby a buyer can get 3.5 times their salary. That used to be 4 to 4.5 times their salary, and sometimes a bit more. They are the main restrictions. I think it's fair to say that as the value of most properties outside Dublin for first-time buyers are under $220,000, that there'll be very little impact, if anything. In fact, to the contrary, I believe for first-time buyer properties outside Dublin, you could see some asset inflation now that the uncertainty of the central bank new rules are actually out of the way. For, I suppose, non-first-time buyers, again, as values are much lower than they are in Dublin, I think in the main, most buyers will be able to come up with the 20% that's required. I think it's likely in Dublin that there's going to be some price inflation for all properties that are valued under $220,000. I think for people, first-time buyers who are buying over $220,000, there are going to be challenges for first-time buyers. I think that will lead to some people staying in rented accommodation for slightly longer than what they had anticipated, and some will try to borrow money elsewhere from third parties to get the balance of deposits that they actually need. For people trading up in Dublin, I think it's fair to say that most people who are selling a property to buy another, in the main, they will have the 20% in their own house to use elsewhere. But there will be some challenges, especially for people moving, let's say, out of a 2-bed apartment, moving to their first 3-bed house. You know, they've already had to save for a 10% deposit. To find more than a 10% deposit buying a second property at the moment will be more difficult, so it could be more challenging for them. Our experience in selling property to investors over the last 2 to 3 years is the majority of investors are buying with 100% cash. Now, there are loans available through the banks, but the criteria is quite difficult to meet. So having a 70% loan to value cap, in my opinion, isn't going to have any significant effect on the market in the short to medium term. The maximum amount that a person can now borrow when purchasing a house is worked at a multiplier of 3.5 times their annual salary. That used to be 4 to 4.5 times, but there are exceptions to the rules, and banks and financial institutions looking at applications can now choose up to 20% of those applications which can run outside that criteria.